I first started in stocks and investing instead of trading. I never became. I didn't even know what trading was. I started in investing in stocks. I just didn't have enough money to be an active investor, right? I would buy and then I'd be out of money and I just have to wait. And like, I'm young, right out of college, like 21 years old, and like it's hard to like you're excited about what you're doing. I had an office and everything. I had like 4 TVs. I was like doing the thing, right? I was doing the thing. And then like I'd buy something and I'd have no money left to spend. I'd be like sitting there just like, okay, what do I do? Like I'm not really an investor. Like I'm all these people on TV are buying and selling every day. Like Kramer's yelling at me to buy and sell all this stuff. I should be doing it. So I eventually got into trading because it was more active and I thought, don't forex, leverage, make more money quicker, all that fun stuff, right? But when I was an investor, I was purely fundamental. I mean, you got I talked about my style before. I call it a common sense approach. But as far as technicals, I didn't know what a price chart was aside from a line chart. Like the price chart just told me how much it cost. I didn't know support and resistance, supply, demand, ebbs and flows, like none of that stuff. It just told me like this thing is worth $56, right? So I always say like I wish, and I use it now. I don't invest as much as I did back then, but back then with the success I had, where I was just like buying and selling stuff on a whim. Not on a whim, but like as far as what levels. Dude, if I knew the knowledge I had today about technical analysis and I can actually pinpoint where I thought price was going to go to instead of just getting out because it felt like it was high enough, or if I could be a little bit more patient and where I bought stuff at because there was actual proof of like, hey, if price retraces, we're likely to continue to this level versus like, oh, that just sounds cheap enough. Dude, I look back at some of those things and I analyze them like I would have been so much better. But you can't go back in time unless you create a time machine. Then we can go back and take over markets. But anyway, so you look at this right here and we walk through this story again. And we see a massive rally, right? We see consolidation, low accumulation zone down here, right around 46s, right? We see this massive rally. And then what do we see happen after this? What type of pattern do we call this? What is this pattern called? Rising channel. Yep. But what category of classic pattern does it fall into? Is it a continuation pattern? Is it I don't want to give you guys the answer. Is a relief pattern, right? This is you throwing a ball up into the air, the ball hitting its apex and starting to lose steam, right? The people that bought down here have cleared structure. They're starting to make profit up here. So we're starting to see less buyers come into the market. We're starting to see some more sellers enter the market because now they think it's overvalued. We're starting to see buyers turn into sellers because, well, you got to sell to take your profit. So we're seeing that shift from buyers to sellers. Now, what other clue do we have to go along with this rising channel? Not only do we have a classic price action pattern, what other clue do we have? Can you see it? I know you see it. Come on. We got some divergence on the RSI, right? So we look at this, right? And I told you my wife started looking at this, or I started looking at it for my wife right at this level. And the first thing is like buy. But would you buy if price is telling you that we've kind of reached the exhaustion point? Do you think that's the best place to buy? Now, as a newer trader, hell yeah, right? Because FOMO, I don't want to miss the move. This thing may go up to 68, 70, 78. I don't want to miss it, right? And then us dumb new traders, right? And I put myself in that category because I just told you I did a bunch of dumb stuff. We buy at the highs, and what happened? It goes low, and then the market, it's against us. Our broker knew it and was, all that dumb excuses we make. But it's just because we're undereducated. It's not your fault. It's your fault if you continue to do it, right? You want to learn from it, but we just don't know, right? We're just so excited to get in, and we don't want to miss out because, we just saw this big move. But the experienced trader and investor knows this pattern. And we know what this pattern tells us about market behavior. And it tells us that there's a likely chance, nothing is 100%, there's a likely chance of exhaustion, a likely chance of relief, a likely chance the market just put all its steam into going up, ooh, and then it needs to take a breath to reload. Okay, so we know that reload is coming. most likely. There's a good chance of that reload coming. I try not to speak in definites because we never know, right? So the next question we ask ourselves is this, right? If then syntax. If price is likely to take a breather, if price is likely to give us some relief, if price is likely to retrace, then where are we likely to retrace to? And this is where we use our technical analysis. Look left, structure leaves clues. Big old stinking inside level of structure, start of our kill zone. Fibonacci retracement, swing low to swing high. Boom, they're lining up at the same area. 56, 58s, beautiful zone. That's the first place we would expect price to go to. Now, you can be greedy and look for it to get cheaper, maybe come down here, for sure. Or you could use that as a secondary position to add to your position, right? I'm going to do that. I told you that if I did that with gold years ago. This would be my secondary. If we come down here, I'm adding more. I'm buying more because I like it. If I liked it here, I like it more down here. I don't like it below 46s. That's when I start to bail. But I like it right here even more. Is there a smiley face I can use? Where's my smiley? I love it. Ba-da-ba-ba-ba. But I'm aiming for price to come to this point because this is the first, sorry, not smile. Well, I did love that price right there. But anyway, this is the first place that I'm thinking price is likely to go to. So I wait. I'm patient. I know earnings is coming out. It can go either way. The reaction, you kind of know what it is, but you can go either way on the reaction. If we go up, I'm not mad because I didn't miss out because I wasn't supposed to buy it at the highs anyway. As a newer trader, I would have been mad because hindsight's 2020. But in real life, if this thing gaps up and I miss it, I'm not upset because it wasn't something I was supposed to be in the first place. Right? And I don't want to overpay for anything. If I go to the store and something costs more than what I plan on paying for it, I don't buy it because guess what I still have if I don't buy it? I still have my money. And I can use that money for something else. If I overpay for something, I've wasted my money. That's the thing that people don't understand. This isn't the only stock in the market. If I don't buy this one, I can just use that money to buy something else. Or I can sit on it. Or I'll flush it into the S&P until I'm ready to take it out and this thing gets cheaper. That was my plan. Just put it back in the S&P, stalk this. When it gets cheaper, take it out, and then buy it again. But we ID'd a level. It came right down to this level. This is a level that I consider to be a cheap enough price point. Now, for me, when it comes to investment, the difference between me and trading, with trading, I would wait for a specific reason for entry, right? Double top, double bottom, inside bar break, higher high, higher close. With investing, I'm strictly looking at price. If I'm doing an aggressive buy, I'm strictly looking at price. It's a more aggressive entry. But do you see how the two can work together? And I got the question the other day from a new tier 1 member who was asking, they were like, Akil, I see that you guys mostly talk about Forex and blah, blah, blah. And I was just wondering, is this stuff relevant for other markets or is it strictly for Forex? I'm like, well, we do mainly focus on Forex. So that's the market that Jason and I specifically trade. And most of you guys trade Forex. But the skill of technical analysis is used everywhere. It allows you to be dangerous in any market. And here's a perfect example of how you can do that in the stock market.